Welcome to the Business Credit and Financing Show. Each week, we talk about the growth strategies that matter most to entrepreneurs. Listen in as we discuss the secrets to getting credit and money to start and grow your business. And enjoy as we talk with seasoned business owners, coaches, and industry leaders on a variety of topics from advertising and marketing to the nuts and bolts of running a highly successful business. And now, to introduce the host of our show, financial expert and award-winning author, Ty Crandall.
To our show today. So today we're going to be diving into 10 easy ways to get financing for your business. So these are not just 10 different ways to get money for your business, but these are really 10 of the most popular ways that we've been working with over the last few months that you can get money for your business, even if you're not able to get money through an actual bank. So let's talk a little bit about business financing. So getting working capital to grow your business doesn't have to be hard. And a lot of people think because they go to their bank that it is hard, but you just got to know that there's a lot of options. And this is one of the biggest problems I run into. When we deal with business owners, what we find is that most of them are going to the wrong place to get money. They're going to their bank when their bank's not going to help them. And because their bank won't help them, they think that it's harder to get money than it actually is. But again, a lot of the options will work for you if you're a startup. A lot of the options will work for you if you have credit challenges or if you lack collateral. You're still able to get financing. I call this a cash access problem because the problem isn't that money isn't available for you. There's actually more money available than you'll probably even know what to do with for your business. The problem is that most people just don't know where to go to actually get that money. And that's part of the reason that we're talking about what we're talking about today. So number one is my personal favorite funding option that's out there today. Now, we call this UBF, or unsecured business financing. And this is one of my favorites because it really provides some of the highest line amounts. And it says loan amounts, but these are really credit card credit lines that you're going to find anywhere. Plus, you get 0% interest. So what's nice about this program is that you can get 0% rates to keep your payments as low as you can keep them, which works really good in the startup phase or when you're using the money to reinvest for some sort of growth. It's no doc. So by no financials, you don't have to provide tax returns, nor do you have to supply any kind of bank statements. So there's a lot of financing out there now that is based on your revenue per bank statements, for example. Not this program. You're not required to have bank statements, or you're also not required to provide tax returns or financials. There's no kind of financial data that you need to actually provide. So these report to the Business Credit Reporting Agency. So dual benefits here. One is that you're actually getting money. The second benefit is that you're building business credit. And if you don't know the value of that, then you could possibly revert to YouTube or some other places we have information about business credit to see. But the easiest way to explain it is that by building business credit, it opens up a ton more funding options for you. So you're getting money and then you're building business credit, which opens up even more financing options for you as well. So you're building business credit at the same time that you're getting money, and that gives you access to even more money without a personal guarantee as you're continuing to build your business credit. So you can usually get about 5 times the amount of the highest revolving credit card you have now. So if you have a credit card right now with the limit of, $10,000, then with this account, you can get 5 times that amount, which is about 50 grand. And it's actually about 5 to 8 times that amount, which is about 50 to 80,000. Now, this isn't based on a credit card you're an authorized user of. You have to be the primary borrower or primary user of the card, but you can get about 5 to 8 times that amount. Now, you can get up to 150,000 in financing with this as well. And this is the highest amount of financing you're typically going to see for a startup. From what we've seen, I've never seen a program that delivers as much cash as this one does for startups. It's very common for us to see people approved for 60 to 120,000. In order to get to the 150, you have to have pretty high limit cards. Now you can get cash out on this program as well. So now you understand why it's my favorite. It works for startups. You can build business credit while you're getting money. You can get the money at 0%, and you can physically take the cash out. So you have the benefit of credit lines that let you take cash out at low interest rates, but you get the benefit of credit cards, which lets you take the cash out at 0%. So you really get 0% money, even as a startup, no doc. There's just so many benefits. And there's no impact on your personal credit with this type of financing because the accounts you're getting are reporting on your business credit reports, not your consumer credit reports. So there's no adverse effect as you're using the credit because you're not adversely affecting your utilization. Now, you need about a 700 score a guarantor. Really, you need about a 680 score, but I should say 680 or higher. The reason I say 700 is because when I say 680, people with even 650 or 660 scores think they can get approved, and that's just not the case. You have to have 680 FICO or higher, but you can use a guarantor as well, a family member, a friend. You can use a relative. You can use somebody else that maybe wants to invest in your business. Anybody that wants to sign as a guarantor that has good credit can be a guarantor. And what's nice is the credit doesn't report on their credit report. So there's no adverse impact on them doing this for you unless you actually default on the credit. Then it would report as collections. But if you're not defaulting, then a guarantor can help you without any adverse impact to them. Now, with good personal credit, you can get these unsecured credit with a personal guarantee. And then again, you're building your business credit to get more without the personal guarantee as well. So a fantastic program. Startups are welcome. 0% financing, no doc. You can use your credit or the guarantor's credit to actually get approved, as well as being able to take 100% of the cash out or nearly 100% and still get it at 0% rates. So I put a link on the bottom of a lot of these slides, creditsuite.com/get funding. That's a real simple way to get pre-approved for anything we're going to basically talk about today. Again, excluding things like grants. So if you'd like to ask more, if you have questions, if you think you may have a guarantor, if you have questions about you qualifying, then feel free to jump into that link and I'll show you our phone number as we end as well. So with collateral-based loans, you're basically using assets that you possess as collateral. And this is the lowest rate financing that's out there. It's even better than what you're going to find with SBAs. And your personal credit doesn't matter. So we talked about a program that works great for startups where credit does matter. With this program, or I should say a lot of programs fall under this category, personal credit doesn't matter, and you're still able to get really low interest rates. So some types of collateral you can use are a 401k or IRA, stocks or bonds. You can use inventory. You can use account receivables. You can use equipment. You can use commercial property. You can use auto vehicles. You can use book of business if you're an actual insurance agent. You can use purchase orders. So the question becomes, what do you have of value that you could use as collateral? So if you have purchase orders to fill, well, those are an asset. Those can get you financing a loan by themselves. Or if other customers owe you money by account receivables, well, that's an asset. Then you can get financing based on that. Or maybe you're an insurance agent and you've built this book of business. Well, that has value. Or maybe you want to flip residential property and the residential property itself could serve as collateral. Commercial vehicles that you want to buy or borrow against. So the best thing to look at is, what do you have? It's an asset. Now, if you use, you really, in a lot of cases, can't use personal things like personal homes unless you're pledging those as collateral for things like SBA loans. But you're not going to get a loan based just on you owning a home, for example. But if you're flipping property, you could get the financing to be able to flip the property. So again, the question becomes, what asset do you have that you could possibly use as collateral? Okay. You can also ask a family or friend for these kind of assets. So maybe you don't have stocks, bonds, 401k or IRA, but maybe grandpa does. Maybe a partner that wants to invest in your business does. And you run by the business idea to them and they say, well, hey, look, I don't want to pledge cash, but I have this stocks, and as long as I could keep my stocks intact and still earn the interest, I'd pledge those as collateral. Well, you could use that. So it doesn't just have to be your asset. It could be a family member or friend. You may even exchange a percentage of your business in exchange for them pledging that collateral for you to get money. And again, they're usually going to want less money than a venture capitalist would, and it lets you win and they win. So let's say you have this great killer idea, or Say you're working as a plumber for a plumbing company and you know you can crush it having your own plumbing company. Well, this makes it easy to go to somebody that has an asset like this and then tell them what you're doing. And they say, well, I want it. And he said, look, I'll give you 10% of my business if I could just use this asset of yours as collateral to get money to get the business off the ground. So keep this in mind because this opens up even more funding options. 401k financing is very typical for this. A lot of people that get 401k financing have multiple partners involved using their 401ks to get the business off the ground. So some of this financing is really specifically used for this purpose, which leads me to number 2, 401k financing. So this is where you're using existing 401k or IRA as collateral for business financing. And with this program, you're not paying any tax penalties. So unlike a lot of 401ks where you pay penalties when you pull the money out of the 401k, well, with this program, there's no tax penalties. So you can pull the money out without paying any taxes or tax penalties because it's based on IRS proven strategies. Now, you can still earn interest on the actual 401k and you get low rates, about 5%. And you can also get loans and credit lines with this program as well and get the money fairly quickly within about 3 weeks or less. So we had a client that got $750,000 approved for this kind of financing when he couldn't even get $25,000 approved at his bank. And his bank had an issue because it was a bar and the bank didn't want to lend to a bar. And 401k financing is one of the many that we're going to talk about that doesn't care about industry. So the number one, the unsecured business financing doesn't care what industry you're in either. And that's why it's so popular with real estate investors and real estate agents, because those are considered high risk industries, but unsecured financing doesn't care. Well, this kind of financing doesn't care about industry either. So that's a perfect example of how somebody got $750,000 in funding when they couldn't even get 25 grand at their own bank. And you can usually get about 100% of what they call is rollable. So what happens with a 401k is it's either vested with an employer or it's not. And if you have your 401k vested with an employer, the employer typically won't let you do this kind of financing or use the 401k for any purpose you want. But if the 401k is not vested with an employer, then you can use up to 100% of the value of that 401k. Now, another program that's similar is called securities-based financing. And this is when you're using stocks or bonds to leverage against business financing. So basically what you're doing is using stocks and bonds to leverage and borrow against and using them as an asset to come in and actually get financing. Now, unlike 401k, you can get up to 90% of the value of stocks and bonds versus the 100 with 401k, and you keep earning interest on the stocks and bonds as well. And it takes about 3 weeks to get this kind of financing. And again, you're dealing with an interest rate of about 5%. And again, you have a choice. You can choose a credit line or a loan. So fantastic way to go. And I love this because so many people, statistically, over 75% of business owners get money to fund their business from family and friends. So that's the reason that 401k and securities, these kind of financing, these kind of options make so much sense because the majority of business owners, I mean, think about it, over 3 out of 4 are going to family member and friends to get the money they need. Well, in this case, your family and friends can still give you the money you need, but they're not giving you the cash. They don't have to take money out of their bank account. They don't have to take money out of their pocket. They're just pledging an asset for you to get the credit line that you need. And this gives them the ability to not take money out of their pocket, which means you're going to have an easier time getting the money to be able to start the business from them without expecting them to dive into their bank account to actually pull it out for you. So get up to 90% loan to value. Rates are less than 5%. We've even seen them as low as 1.6. And this is a line or a working capital line of credit. What does working capital mean? Working capital simply means you can use it for any purpose. So what you need to know when it comes to lending is that when it comes to lending, most loans you get, like from SBA, you have to have a set purpose of what you're going to use the money for. They're going to ask you what you want to use the money for. They're going to scrutinize and make the lending decision partially based on what you want to use the money for. Any kind of working capital loan or line of credit means you can use it for working capital for general purposes. You don't have to specify what you're actually using the money for. And there's no credit requirements for any of the 3 we've talked about so far. Well, excuse me, unsecured business financing there is, but the 2 that we just talked about, 401k financing and securities-based financing, there's no personal credit requirements. They don't even pull personal credit. So another option is inventory financing. And this is when you're doing one of two things. You're either using existing inventory to qualify for financing, or you're getting money to actually buy new inventory. Now, you need to have pretty high amount of inventory, about 500,000 or more. So this won't appeal to a lot of you because you might not have 500,000 yet. But when you do get up there, this is a great way. As your business grows and scales, you need to have more and more and more inventory. And the more and more inventory you invest money into, the less working capital you have on hand. This is a great transition between those two. You could still have a lot of inventory. You still get a line of credit against the inventory, so you still have access to money and you still have the inventory you need. Now, you can get approved for a line of credit for about 50% of the value of the actual inventory you have. Rates are about 5 to 15% based on risk. And what they're typically going to want with this financing is some kind of inventory management system in place. You have to know what's in your inventory and know the value of that inventory, obviously, to get approved. But if you have just that, then credit doesn't even matter with this. You can still get funding fairly quickly as well. So you need to have at least 150 in inventory, or at least $150 loan amount, which means at least 300 or more in inventory. And again, you're going to get about 50% of the value. So you're going to have at least 300,000 in inventory with some programs. Most of them now require the 500,000 in inventory, just so you know. So another option here that's very common for a lot of you is account receivable financing. What is an account receivable? It just simply means somebody owes you money. So if you sell your product or service and you don't get paid right away, and that person pays you over time, that's what account receivable financing is. So let me use our business as an example. We have a system where people could build business credit for their EIN that's not linked to their social. They use our technology, they use our advisors. Well, we let people pay over sometimes 7 to 12 months time. AR financing gives you money. It advances you money. Instead of waiting 7 to 12 months to get paid, you get advanced the money right away, or a large portion of it. That way you don't have to wait all this time to get paid. You can get paid much sooner. So if you accept payments from customers and wait to get paid, this works well for you. And if you don't yet, well, then think about this, because this opens up an easier way for you to take money from customers through payments, because then you can actually get that money advanced to you sooner using this kind of financing. So you can get as much as 80% of receivables advanced ongoing in less than 24 hours. We even have a brand new source we just added that will now let you go as high as 90%. So what that means, it means is if you have $100,000 in money that's owed to you, you can get 90,000 of that now advanced the next day. Boom, no longer waiting 7 months. Here's 90 grand the next day. Then the difference of the 90 and the 100% that's paid, the 10% in this case, the 10,000, that gets paid to you after those invoices are paid and after the actual company that handles the AR collects their money. So customer comes in, customer pays you over 5 months, you get advanced 90% of that money the next day. When the customer pays the invoice, then the 10% minus the actual lender's fee gets advanced to you. That's how AR financing works. The remainder of it, again, comes to you once the actual invoice is paid in full, and this only takes a couple weeks to secure. Super low rates. This is called factoring, and the factor rates are very small, about 1.33% per the time the money is outstanding. This is an account receivable line. So usually sometimes you can even get rates of less than 1%, and there's no consumer credit requirements. Now, receivables should be with the government or another business in a lot of cases, but we now work with lenders that will even do it with you as a consumer. So even if you have consumers that owe you money and it's not government and it's not other businesses, you could still use this, but you need to keep in mind, most lenders don't do that. Most lenders in the AR space absolutely require that the receivables be from the government or business. We just added a brand new source, as I mentioned, in this area that now lets you even do it with consumers. And if you also have purchase orders, well, you can get those financing as well. That's a different kind of financing, but you can get purchase order financing as well. So Let's say, for example, you're a t-shirt embroiderer and you get a huge order to embroider all these t-shirts. Well, in order to do that, you'd have to physically go buy the t-shirts and then embroider them. Well, let's say you don't have the money or don't want to spend the money to get the t-shirts. You use purchase order financing to get the financing to buy the t-shirts, then you embroider and then you sell and make your money without having to front all that cash that it can take for you to actually then come in and be able to fulfill the orders without taking the money out of your pocket. So keep in mind, there's two things to think about here. One, is this something you have now? Do you have purchase orders? Yes or no? If the answer is no, well, don't write this option off, because this, now that you know about it, opens up the door for you to then consider using purchase order financing to accept bigger orders. Maybe you don't accept bigger orders because you know you don't have the money to actually buy the supplies or what's needed to fulfill the order. Well, with purchase order financing, you can use the financing for that purpose, giving you another way to be able to do business, the same as account receivable financing. And again, you don't really need to verify cash flow. A lot of lenders want you to be in business 1 year or more with account receivable financing. A lot of lenders don't have any kind of time in business requirements for purchase orders. So even if you're starting your business by getting purchase orders, that can help you even get the money in a lot of cases to get the business off the ground. And again, up to 90% now of receivables. A lot of places will require that you're in business 1 year. And again, a lot of them will require being in business for, or that wants you to actually be in business taking money from another business, but super low rates on this as well. So there's equipment financing. There's several different options here. There's 3 different options we're going to talk about. One, you can buy equipment or lease it. Buying equipment you could do as a startup. So I've got a friend of mine that just bought this huge medical machine to open up her practice, and we helped her get financing even as a startup to buy the machine. Equipment leasing, they want you to be in business about a year, similar to buying, but your interest rates are a little bit better. So you can use your first and last month's payment to actually get approved. So with this kind of financing, that's about the minimum that they're actually going to ask for. Meaning, if you supply your first month payment and your last month payment, then you can get approved with no other money out of pocket. Now, to give you an example of what we did with her, just to think about how all this could be used, we got her unsecured business financing to help with payroll initially. And what we suggested was, don't use this to buy the equipment. Instead, come out and get equipment financing. And to get the equipment, they're going to ask you for first and last month's payment. Use the unsecured business financing we got you to pay the first and last month's payment. So that way she was able to get the equipment without paying the money, because she used another kind of financing to cover that first and last month's payment. So ways to think about tying all this money together. The most successful business owners we work with tie together multiple different kind of financing to access more capital, which is why I want to bring that to your attention. So rates vary wildly based on risk. I've seen rates as low as 6% on equipment financing. I've seen them as high as 65%. So what I like about programs that have wildly varying interest rates means they work with wildly varying different types of risk. The person that paid 65%, its credit was really, really, really bad. Okay, the person that pays 8%, 5%, 6% has really good credit. So again, there's a lot of factors that tie into risk, including the kind of equipment you're buying, but interest rates are going to vary based on the risk, and you can be approved in most cases with a 650 score, but we even see clients approved with 520, 580. That's just harder to get that kind of financing. So keep in mind, I'm telling you on the slide here of what kind of score is average for that program, but then I'm also expanding off that and telling you what's possible as well. So 650 is very average, but again, you can be approved even with 520, 580 scores in some kind of cases. Now, there's also going to be what's called a cash out option. So with this kind of financing, what happens is you're actually coming in and you're doing what's called a sale leaseback. So with the sale leaseback, let's say you don't need to buy equipment, but you already own it. Let's say grandpa owns a backhoe, you own a printing press, and you want to use that as collateral to borrow money against it. So you don't want to get money to buy or lease equipment. You want to use existing equipment to borrow against. Well, that's called equipment sale leaseback. And with that, the lender will undervalue the equipment by about 50%. So don't come in and think you have a $100,000 piece of equipment and that they're going to give you 50 grand. What they're probably going to do is say your $100,000 piece of equipment's only worth 50. because they're looking at a fire sale value if they had to sell it quick, then they'll give you about half that. So I always say that when I talk about equipment sale leaseback, because this is a surprise a lot of people have. They have a piece of equipment and it's way undervalued when we get them approved. So I want you to know that going in, that with equipment sale leaseback, they absolutely will. Now, it's got to be major equipment only. You can't say I have like 50 office computers and printers. It's got to be one major thing, like in this picture here, a dump truck, for example. The lender's not going to combine that smaller equipment. And this is pretty typical to get loans up to $2 million. We have equipment financing above $2 million. It just puts you with different kind of parameters, different kind of requirements. Credit requirements are better, time of business changes, etc. But everything I've shown you today works up to $2 million. Now, crowdfunding. So there's services like Kickstarter where you can come in and actually run a project where other people are then coming in, a crowd of people is contributing money to get the money that you need. Now, you got to read the fine print here, because a lot of these platforms may give you all the funding back to you if you don't meet the goal, and that's the way some of them are. So if you say you're trying to reach a $10,000 goal and you only reach $9,000, well, then they may give it back to everybody that actually came in and gave the money instead of giving it to you. So with some of these, that you have to give them, you have to reach your goal. With others, they're going to take a larger percentage. You need to read the fine print. Every single one of these crowdfunding platforms is different. They're in the United States, they're in the UK, they're all over the world. So first, be conscious of the one that you're using. Are they in the States? Are they not in the States? How comfortable are you using one that's out of the United States if you're using one? And look at the small fine print. Are they going to give you all the money back? Are they going to give the money back to the investors if you don't meet the goal? Or are they still going to give it to you? What is their fee? How does it work? So make sure, there's so many different platforms that you need to know these things, okay? So Indiegogo, for example, has a flexible funding option where even if you don't hit your goal, you don't have to give all the money back. So again, there's different options here with different kind of platforms. So crowdfunding platforms take a percentage of the donations. That's typically how they get paid. And they generally push to have you deliver on your promises, so you'll have to automatically manufacture a product or do anything else your business is supposed to be doing. So by this, I mean, if you're going to come in and run a Kickstarter campaign to sell something you just invented, well, then you have to really invent that thing and make it available to those people that are contributing. This is why you got to read the fine print, because you can't use these as fake fronts to go in and raise all kinds of money for something that doesn't exist. There's all kinds of legal ramifications to you if you do that, which is why you really want to focus on the fine print. Now, donors can become weary of crowdfunding pitches as well. So again, this typically works better if you have, I don't know, some kind of cool idea, some kind of brand new concept that's groundbreaking, some kind of new product that's never been seen before. You already have a bunch of financial backers already. These are the kind of circumstances that typically make crowdfunding campaigns successful. So don't think just because you want to invest in real estate, you're going to go to Kickstarter and start a Kickstarter campaign and everybody's going to start throwing you money. That's not typically how it works. But if you came in and found a brand new way to do real estate investing and a brand new product that nobody's ever seen, well, that would be a type of program that could work for a Kickstarter. So again, these are usually for inventions, big new products that solve big problems, people that already have a bunch of donors lined up. Those are the type of people that typically succeed with crowdfunding. So straightforward businesses might not do so as well. Crowdfunding tends to work best when donors can personally connect with the product or service. Okay, so it's often products which aren't quite on the shelves yet, artistic endeavors. It's the unique stuff that people really haven't seen. Standard stuff, you're just not going to get it. So if you're getting into a field that somebody else is in, then it's probably not going to work. What makes these campaigns work is the uniqueness of the products that are actually put on there, not something that you're rolling out, something that's already been done. That's just a harder road ahead. And I tell you this stuff because a lot of people think crowdfunding is an end-all be-all, that it's just a great way to be able to get for anybody to get money. It's just not the case. You usually have to have something pretty unique, pretty rare for somebody to come in and really contribute to it. They're not going to give you money for, regular sunglasses. Well, sunglasses, perfect example. I have sunglasses on my desk here. So they're not going to give you money for sunglasses because They're sunglasses because there's a bunch of sunglasses. But sunglasses on my desk actually are very unique because these sunglasses correct for color blindness because I'm colorblind. So that's a perfect example. If you were the first one, which they're made by Enchroma, if you were Enchroma's product that are sunglasses that actually correct for color blindness is an ingenious invention. And if they would have went to Kickstarter with that, they would have probably raised hundreds of thousands of dollars. If they would have had regular sunglasses on crowdfunding, it probably wouldn't have worked. So a perfect example of how the uniqueness and solving a big problem and being first to market with something rare, how these platforms are a really good place to get in and get started without giving up tons of equity like you'd have to do with venture capital. Okay. So that being said, you also need to decide on how much you're going to ask for, what perks you will give. Okay. So for example, is part of your campaign collecting pre-orders for the actual product, or what are you going to give them as a reward for donating? And again, all of these platforms are different. Some have expectations of what you give. Some you have to give equity in your company. Some you're pre-selling the product. All of them are a little different. When are you going to likely to succeed? What time frame are you thinking about? What's the length of your campaign? How long are you going to raise money for? These are factors that you're commonly going to need based and that will vary based on the type of crowdfunding platform that you're looking into. So you got to evoke emotions in your donors. The most effective feelings are urgency. They got to donate now. Scarcity. They can't get the product or service anywhere else or it's running out. Novelty. Your product or service is new or your spin on existing one is. Cool factor. Your product or service is cool and has cachet. So what we look at here is, again, the uniqueness of something that's cool, something that's rare, something that people want to be part of. That's what makes crowdfunding work. It's not because you're trying to, roll out a new pair of sunglasses. It's because it's cool, it's unique, it's hip, it's different. People want to be part of something. People want to be part of a movement. So when you design these campaigns, the language you use in the description, the product that you may use them for, all those things will tie into your actual ability to succeed here. So make sure that you have a pitch video that's good. You probably want to reference that on your page. People don't want to read a bunch of text. People would like to see details in a video. So add a video and even add a link into the text. Some of them even let you put the video there. Always be courteous to anybody that has comments, questions. Present any tangible evidence of your product or service so you don't look like fly night. If you think it's going to work, if you've done market research, well, then put that stuff on there. The more basis you have of something succeeding, the more somebody's going to want to be part of it. And don't ask for far more than you need, because if you do, a couple things will happen. One, these platforms' algorithms won't let your project really ever go viral if you're really, really below what your goal is. So you want to even exceed the goal. That's when things really go viral. When Kickstarter and all their platforms start promoting your project is when they see you wanted 10 grand and you got 50, because that means you have a runaway hit. They know it. They start promoting it everywhere for you. Without that promotion by them, well, then you're pretty much reliant on your own network to promote the crowdfunding campaign. So again, don't be greedy and ask for way more than you need. That even adversely affects their algorithms, making it harder for you to actually access the money that you need. Okay, so more campaign basics. Okay, be gracious even if your campaign fails. Your stretch goals should be a mix of readily attainable and pie in the sky. So again, the stretch goal, and some of them ask for stretch goals, shouldn't be completely ridiculous. It should be somewhere in between what you think you're going to get and what is absolutely ridiculous. Line up your most significant and dependable donors before you even start. There's a reason this is bolded, because most people don't know this, but crowdfunding campaigns, that's how they succeed. People don't just typically put a project out for 10 grand and get 100. What they've really secretly done is they've lined up a bunch of donors before they even ran the project. And then the minute they run it, they approach those donors donate. The crowdfunding program like Kickstarter sees all these donations rolling in. They see it's a runaway hit. They promote it and it goes viral. In almost every case you look at historically, and I've looked through the history of the biggest campaigns that are funded with Kickstarter and all these other ones, you find that they already had donors lined up before the project ever went live. So many people think they're going to run a crowdfunding project and the thing is it's going to go viral and money's going to pour in. What most don't know is that really the success of a crowdfunding campaign comes down to a social drive by you. It's your ability to push it on Facebook. It's your ability to get your friends and your family to push it on Facebook. The more people you have self-promoting the project, that's what actually makes it succeed. Lining up the donors beforehand, self-promotion of the project, that's what typically will actually make this campaign succeed. It's not just that it goes viral on its own. Honestly, it won't go viral on its own if you're not doing these things. So number 8, SBA loans. You usually need to show more time in business for these. So these, the first requirement they're going to have is 2 to 3 years of tax returns. And there's a reason for that, because the majority of businesses fail in the first 2 to 3 years. So if you don't have 3 years tax returns, you haven't been in business 3 years. And that's why they won't even touch you. So it's a nice way of them saying, don't even bother to apply with us at a big bank unless you've been in business. Now, the most popular is called a 7A. And a 7A is for working capital, and you now know what working capital is. It can be used for any purpose. So a 7A can be used for any purpose versus something like, other programs they offer, which is like a 504, which has to do with real estate only. You can typically get approved for $750,000. Rates are about 2 to 4% above the prime interest rate, and all owners more than 20% ownership have to provide a personal guarantee. Look, even building your business credit won't get you away from personal guarantees with these kind of loans, because the loan amount's just too high. The risk is too high. So anybody that owns more than 20% of the business is going to have to provide that PG, and good consumer credit's going to be required. We've seen people turn down with SBA loans with 780 credit scores because they had one derogatory item on a major account like a Bank of America. So they say that all you need is a 620 FICO score. I've never seen anybody approved successfully for an SBA loan that doesn't come in and typically have a much higher score. We just funded a $150,000 SBA, for example, and they had good credit and they had financials as well. So SBA Express is just a faster way to get an SBA loan because the loan amount's a little smaller, up to $250,000, rates about the same. And also available is called a Community Express. So this is for low and moderate income entrepreneurs. So SBA actually has a lot of different programs you can qualify for. They also have what are called cap lines. And cap lines are their umbrella product for lines of credit. And cap lines work really, really good if you're in certain industries like construction, or if you're in a seasonal business, or if you're a contractor. There are specific SBA cap lines that are designed just for those industries. So, the Community Express, the SBA loans, the cap lines, they have a ton of different programs. The 504 is the second most popular, and that's for real estate, to buy land, to buy equipment, to buy real estate. The bank funds the loan at SBA, generally guarantees up to 40%, and you can usually get loans up to about $1 million with a 504. And typically you can even contribute 10% of the equity. So you can even use equity in your business as collateral as well. Now, 7M is the micro loan program, loans up to $35,000 for working capital and growth. Average loan amounts of about $10,000. Now, look, this doesn't sound like a large amount, but what's really interesting is that like 70% of the clients that come to us for money only want less than 10 grand. So this is a really good way. If you're looking for a little bit of money, which I'll talk about here in a little bit, consider microloans. Microloans are these smaller loans that are much easier to get. You need to know that when you're trying to get greater amounts of money, the scrutiny is going to be substantially more. It's kind of common sense, right? I mean, if you want $350,000, you're going to be scrutinized a lot more than getting 35 grand. As a matter of fact, you could fairly easily get credit cards with limits of 35 to 50,000 without a personal guarantee and without a personal credit check, just by building your business credit. So this is what I tell a lot of people: stop looking for $500,000 at one source. It's impossible for you to do that. Not impossible for everybody, but if you don't have good revenue and collateral and all these other things, but you can use unsecured business financing to get 150. You could use 401k financing to get another 100. You can use micro loans for 50. If you piece together different kinds of financing, that's really the key to getting the most amount of money. And this is why our clients have so much success, because we work with over 1,000 lenders and 15, 20, 30 funding programs. And so because of that, we can often get somebody 4, 5, 6 different kinds of loans and credit lines. And that allows them to get more money because they're getting it from smaller amounts from more sources. It's easier to get approved in one loan from one big source, and you could typically get more money that way as well. So something to think about. And again, with the micro loan, they come straight from SBA. Why does that matter? Because most people think that SBA loans and cap lines come from SBA, and that is absolutely not the case. SBA guarantees the loan, and the lender lends the money. So what happens is big banks like Bank of America, they're government insured. They have to be very conservative on their risk because the government requires they be very conservative. This is why it's very hard to walk into Bank of America and get a loan. But what Bank of America will do is they'll give you an SBA loan. They'll give you an SBA loan because SBA will guarantee up to 90% of the loan in case you default. So let's say you go to Bank of America and Bank of America gets you approved for an SBA loan of $100,000. Bank of America is the one that lends you the money. But if you ever defaulted on the loan, let's say you defaulted right away, well, then SBA would give Bank of America up to $90,000 of that $100,000 you defaulted on. So because SBA guarantees the loan in case of default, then it becomes easier for you to come in and get approved because SBA guarantees it. If SBA didn't guarantee loans, you probably would never be able to walk in your bank and get almost any kind of financing. But with micro loans, you could even get these directly from SBA without going to a bank. Why that matters? You don't have to qualify with both places. With SBA loans, you have to qualify with the bank and with SBA. With these kind of micro loans, you only have to qualify with SBA's requirements, not the actual bank. Okay. So grants, like scholarships for school, grants generally do not have to be paid back. They're gifts. You could generally have to show experience in what you're proposing. Governments often have lists of grants that they're ready to give out. We don't handle grant financing. And I have to clarify that because I've said before that we deal with almost all kind of financing you're going to see here. Grants we don't deal with because they're not issued by us. They're issued by the government. But there's a lot of different places you can go to access lists of these grants depending on the kind of industry you're in, the area you're in, etc. Always check the requirements carefully and follow them to the letter. That's what this is about. It's the government. Okay, I can tell you coming from the military, it's all about detail. If they tell you exactly what to do exactly what they say. Because if you do go outside of their scope, you can oftentimes be declined. So the federal government has a lot of different kind of grants. For urban projects, try HUD. Okay, HUD has a lot of things where they want to develop in certain areas. This works really good for people flipping properties. There's all kinds of money out there for communities that want you to buy dilapidated properties and fix them up. So things to consider here. Okay, funding opportunity, FR 6100-N-07, the capacity building for community development and affordable housing grants. Okay, the funding opportunity, FR 6100-N-14. Jobs Plus initiative. So these are just some of these kind of HUD programs they have where they're trying to improve certain areas of the community. And so they want to lend you money. They want to lend you more money if you start a business there because you're hiring jobs, right? It's a job initiative. They want to hire money if you're buying up the real estate and fixing up the real estate because you're making the community better. So there's all kinds of these grants. Those are just a couple examples of some HUD grants. So for rural projects, again, also try USDA. Okay, they have a 101 Rural Business Development Grant. They have a 101 Value Added Producer Grant. So again, these work really good in rural areas because they're trying to attract more people there. They're trying to attract more people and more businesses. So think about this because a perfect example is Amazon. A perfect example. Amazon is getting ready to build a new facility. And right now they're having all these cities basically submitting bids, and they just announced that they've narrowed it down to 5 different cities that they're choosing from. So again, this, Amazon going to one city, it could bring 50,000 jobs. That's why all these cities across the country are competing for Amazon's business. It's the same thing here. You might not be delivering 50,000 jobs, but the fact that you're creating a business and creating jobs in these areas enough by itself is for you to actually get funding. So federal funding always means paperwork. So fill it out completely and correctly to be considered. So your local government also provides these kind of grants. Florida Small Business Grant, for example, down here in Florida. North Carolina Small Business and Women and Minority-Owned Business Grants. As a matter of fact, this is interesting that I pull this up because when you look into this, you'll see a lot of grants for minorities. You'll see a lot of grants for women business owners. You'll see a lot of grants that are statewide or county-wide or city-wide. If you do any kind of research, and here's what's crazy, most business owners do no research into this. So a lot of this isn't difficult to get if you recognize the money that's available in your community and you actually take the steps to get it and fill out the paperwork exactly as it's supposed to be filled out. So obviously, often less restricted than federal grants on a state level and local level, okay, and this shows that you're helping the community, which is why they're ultimately doing it. And again, you can even partner with a local business and go in this together. So some pretty good ideas. So number 10, business credit. Well, again, this is credit that links to your EIN that's not linked to your social. And it's also available without a personal guarantee because you're not providing your social to have this kind of credit, actually to access this kind of credit. It's available regardless of personal credit because there's no personal credit check. You can get it even as a startup. You don't need collateral. You just need to follow those particular steps. So why I love business credit is really simple. Anybody can get it. Anybody with a business can get it. Anybody. Your credit doesn't matter. Your cash flow doesn't matter. The assets and collateral you have don't matter. If you notice the first 9 we've talked about, you need one of 3 things. You either need good credit, collateral, or you need some kind of cash flow, which we didn't talk about a lot of cash flow options besides SBA. But with business credit, you need none of those. You could be just starting out with horrible credit, have no revenue, no assets, and still come in and get $30,000, $40,000, $50,000 limit credit cards within 6 months or less. So you basically are starting with vendor credit. These are starter vendors like Uline, Quill, that'll give you credit to buy stuff like office supplies, shipping supplies, stuff that you probably need anyways, and that also reports to the business credit reporting agencies. And then they report to the reporting agencies typically within about 30 to 60 days. That establishes a business credit profile, establishes a business credit score. Okay, and Uline, Quill monopolize your marketplace. That's these kind of vendors. So there's a couple main ways to start building business credit. You can do what I just told you, use these kind of guys. These vendors will give you credit even when you have none. They report it to the business credit reporting agencies. They don't do credit checks, so anybody can get it. Don't forget, you could also go with the number 1 program I showed you too, unsecured business financing. That would give you about 5 accounts or more on your business credit reports. You wouldn't need to do this step if you followed UBF. So unsecured business financing works great if you have good credit or a good credit guarantor. But if you don't, then you want to consider going with vendors because you accomplish the same thing of building your initial business credit. You want to get about 5 of these. Okay, the more you have, the better. Once you have it, then you can start to get store credit. Now, you'll start to get credit of about $2,500 to $10,000 in about 60 days. Dell, Amazon, Walmart, Best Buy, for example, Shell, Exxon, Costco, Sunoco, Sears, Sprint, AutoZone, Pitney Bowes, Home Depot, Lowe's, Office Depot, Staples, Apple, Amazon. Amazon's fairly simple to get once you get a few accounts on your business credit report. So these are all offering you business credit without the guarantee and credit check. Now, as you continue to apply, you get more and more credit with stores and your limits get higher as well. And then you're using those things to fund your business. So what I always tell people is that if you think you need $50,000 to start or grow the business, the question becomes, what do you need the $50,000 for? What do you need it for? Do you need the $50,000 for what? I need $5,000 in office supplies. I need $10,000 in payroll. I need $5,000 or $10,000 in equipment. Stop. So you don't need a $50,000 loan. What you need is business credit to get your $5,000 of office supplies. You need equipment financing to get your $10,000 of equipment. So far, the only thing you need a real loan and credit line for is $10,000 for payroll. So when you think of it like this, it's easier to get the money you need because instead of trying to get one credit line for $50,000, now you don't need a credit line for $50,000. All you need is a credit line for 10, and then you can get office supplies and use business credit to get that $10,000 and $10,000 in equipment financing. So it makes it easier for you to get the money that you need. Okay, so fleet credit. Now, if you have about 8 to 10 accounts, you can get this: BP, Chevron, Wex fleet card, RGS fleet card. Okay, so these have higher limits, and they help you get auto vehicle repairs and maintenance and fuel. Look, if you own a fleet of vehicles, we'll stop right here, right? You get the value of this. But even if you own one primary vehicle, still, it takes a huge weight off you if all your vehicle repairs, maintenance, fuel, those type of things are covered. Now, business credit, again, is the only way to get money for your business if you don't have collateral, cash flow, or good credit, which is why it works so well for so many businesses. Now, the next thing is you end up with cash credit, okay? You move into Visa cards, you move into MasterCards, you move into American Express cards where you're not providing a social and you're still able to come in and get money without a personal guarantee and without a personal credit check. Okay. So again, we've talked about these kind of stores. We've also talked about Visa cards, MasterCards. You need about 10 to 14 accounts to get those. So I have a board in my office, and if you ever follow us on Periscope or Facebook Live, you'll see that people tell us their approvals. And if you're part of our group on Facebook called Get Business Credit, you'll see people tell us the real approvals. They even take pictures of their card without the card number, and they tell you all the success that they're getting along the way. And then I have a board where I track a lot of these results so we can see what's possible. So last week alone, as an example, we had a client get an American Express for 50 grand without the personal guarantee, without the personal credit check, and get a PNC Bank credit card for $50,000 as well. These are Visa cards, these are MasterCards, Amex that you can use anywhere. And they did that within 6 months or less following these steps because they had 14 trades. It's all about trade accounts. What's a trade account? The reporting of an account to the reporting agency. So many people do this and tell me that it doesn't work. Okay, I mean, I have hundreds of people on YouTube that say, I tried it and it didn't work, and business credit doesn't work because they don't know what they're doing and they fail trying to do it. Well, I can tell you that this is what it's all based on. It's based on the number of accounts you have on your credit reports. So business credit's all about getting these different tiers of credit that report on your credit report. The more credit you get, the more credit becomes available to you. Okay, so anyone can pull your business credit reports. Keep that in mind. Anybody can see the quality of your actual business credit. You need business credit to qualify for loans. You can get a lot of loans nowadays without using business credit. But if you ever want conventional loans and bank loans and the low interest rate long-term loans, you've got to have business credit to be able to get that. And you can get high limit accounts very quickly when you're building business credit as well. You can start to get to $10,000 to $20,000 limit accounts within the process and within a very short period of time. Usually you can get that within about 3 to 4 months and get Visa cards, MasterCards within 6 months or less. And again, without the personal guarantee, without the personal credit check. Everybody should do this. No matter what kind of funding you can get that we've talked about today, you still need to get business credit, because why the heck wouldn't you? It's money without a personal guarantee, without a personal credit check. Anybody can get it. And if you start right now, today, building it, then you're getting $20,000, $30,000 limit accounts by the middle of this year. So huge benefit, something you should get whether or not you can or can't get other kind of financing. So microloans, and I say second bonus here. I had a first bonus program here, but it was really the same thing as AR financing, so I removed it. But I will bring that up as a matter of fact, because with AR financing, something I didn't mention was if you have account receivables or you have revenue of 100,000 a month or a year or more, we've got a great new lender that actually will do credit line up to 100 grand with absolutely no personal credit check. It's just based on looking at your account receivables per your QuickBooks or accounting software, or your revenue per your bank statements, and they approve within 24 hours just based on that information. We tried it out. We got 30 grand. They just bumped us to a $100,000 credit line without a personal credit check at all. So that program I will mention is my first bonus. The next one is microloans. So you can get microloans from a regular lender. Instead, you can't get them from regular lender. Instead, you get it from a micro lender, the Association for Enterprise Opportunity, to find a local micro lender. So micro lenders are offered by SBA. We just saw that. Not even the big bank. They're offered from SBA themselves. And they're also offered by a lot of different lenders. And if you go to the Association of Enterprise Opportunity, you can find a whole list of sources that issue microloans. And you can also go to microenterpriseworks.org. And I'll leave that up so you all can take a quick picture with your with your smartphones, or take a screenshot. So microenterpriseworks.org. or you can just search Association for Enterprise Opportunity. Those are two great places to access microloans. So microloans, exactly what it sounds like. It's not a lot of money, but if your business only needs about $500 to $35,000, a microloan could work for you. So a great way to go to get financing. So there's a lot of choices for funding. Unsecured business financing, which has good credit from you or a guarantor, which we talked about. We talked about collateral-based programs. We talked about 401k. We also talked about securities-based financing, inventory financing, and equipment financing, all that are based on some kind of asset collateral. We didn't dive into, but we did briefly talk about commercial vehicle financing, house reseller financing if you're flipping homes, book of business financing for insurance agents, commercial real estate financing is all using collateral for financing as well. So there's a lot of options. And again, you got SBA loans. Don't forget grants. That's not even loans. It's free money. Don't forget that you can go to crowdfunding and use those platforms, business credit, which anybody can get, invoice factoring, which again, I just talked to you about having AR revenue and getting a credit line with no credit check, microloans. I gave you two great sources for those that very few people even know about. So it gives you the ability to get the 10, 20, 30 grand. That on top of business credit can make a big impact on your business as well. So we definitely covered way more than 10, right? If you think about it, equipment financing alone counted as one, but we talked about equipment financing, equipment leasing, and equipment sale leaseback, for example. So there's a lot of different options, well more than 10 easy ways to get funding. And again, you have a few options here. If you want to talk more about what money you can get, give us a call, 877-600-2487. info@creditsuite.com is our email, creditsuite.com/get funding to get pre-approved. Guys, look, our vision is that business owners should have access to all types of capital in one place. I don't know why this hasn't been done, but we're trying to get it done, to go to all legitimate lenders that offer every legitimate kind of funding program and put them in one place so you can access every loan program without going to On Deck for a revenue deal and seek capital for unsecured financing, for example. We offer both of those from both lenders in one place, right? So it makes it easy for you to access all capital in one location. And again, the other cool thing is we don't charge you a dime to get money, not a dime. We don't charge you when you apply. We don't charge you points on the back end either. What happens is some lenders will actually give us referral commission fees for referring them. So that's how we get paid. So it doesn't cost you anything for us to help you. And we have an entire finance team that's full of finance officers, processors as well, that process finance deals, customer service, to just help with every aspect of getting loans. We just closed a $350,000 deal. We just closed $100,000 to $60,000, and all these different kind of programs we're talking about. So I don't tell you this to brag. I'm just telling you this, that if you need money, we can help you. Feel free to reach out to us and we'll talk to you a little bit more. So I'm going to wrap this up. Reach out to us, 877-600-2487, info@creditsuite.com. And also don't forget, if you'd like to get pre-approved for funding, go to creditsuite.com/get funding. And if you'd like more information on business credit, grab our free guide at creditsuite.com/EIN. When you go to creditsuite.com/EIN, you don't just get the free guide, you get it on our email list. And if you want off it, you'll get off it. But all our email list is everything to do with getting capital, different ways to get loans we didn't talk about, how to build business credit, the steps, business credit scoring, all that. And you can get into all that with creditsuite.com/EIN. Thank you all very much for attending. Thank you for the thank yous. And I look forward to talking to you in 2 weeks. We'll be back on our webinar. And then next week, we'll be live at the same time, 1 o'clock Eastern on YouTube Live. Everybody, thank you so much. Hope you have a great day.
You've been listening to the Business Credit and Financing Show with your host, Ty Crandall. Watch for our next episode to get even more insight on financing and growing your business. And don't forget to check us out online at creditsuite.com for even more business growth strategies.